Hi, everyone, and welcome to today's webinar on insuring convenience, grocery, and liquor stores. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today we have Teresa, CID's commercial underwriter, and Michelle, second VP at USLI's hospitality and liquor team, sharing their expertise and giving you the tools you need to properly insure these businesses. So we'll be going over the specific learning objectives in just a second, but first I wanted to quickly go over the logistics of this webinar. As you can tell, you're all muted, but there's a chat feature where you can type your questions in and we'll answer them throughout the webinar. Your voice is important to us and we want to make sure all your questions are answered, so please feel free to chat them in at any time. Okay, here's what we'll be going over today. We're going to give you an overview of these industries and their exposures. We're going to discuss the specific coverages these businesses need. And we're giving you the specific questions you should be asking to fully understand the risk. And we're going to tell you exactly what is needed to get a competitive quote from CID. So without further ado, I'll pass it off to Michelle.
Thank you. Hello, everyone. So let's get started with talking about the industry as a whole. So you can see on the slide here just the number of establishments that there are nationwide that are considered convenience stores, delis, groceries, or beverage stores of any sort. There is a wide variety of these exposures. I'm sure that many of you stepped foot in one probably within the last few days because there's so many different types of exposures when it comes to the retail sales. And this is a growing industry. So we know that the annual sales revenue that comes from convenience stores alone is just about $650 billion of sales revenue. And when we look at the liquor stores or the beer wine stores, they have about $60 billion coming in annual revenues. So all of that just to say that there is a huge opportunity to capitalize on writing this business. So when we're talking about convenience stores, delis, groceries, there's a wide variety of exposures that will fall within this type of exposure. I just want to clarify what that looks like for you so that you can kind of paint a picture in your mind for the exposure that we're underwriting on these risks. For a convenience deli grocery store, they may or may not have gasoline sales. They typically do have dry goods like snacks, grocery items. They could have alcohol, lottery, tobacco, CBD products, and they may have some self-serve car wash exposure. All of that for us would fall in what we call a convenience, a deli, or a grocery store. A beverage store is a little bit different in that the majority of their sales are going to be coming from alcohol sales, whether it's beer, wine, or hard alcohol. Usually, what we call a liquor store is going to have 75% or more of their sales coming from that sale of alcohol. So why do these establishments need liquor liability coverage? I'm going to touch on this for a couple of slides just because it's really important to understand the need that is in place for a retail store. You might not think of it top of mind because you think of it as somebody who's not actually serving alcohol, they're just selling it to be consumed elsewhere, but there is an exposure for them that out of due diligence, they should be protecting themselves. So each state has what we call dram shop laws, which are liquor laws, and they are governed by at the state level, which is important to know because every state's liquor laws are going to look a little bit different. 43 states across the United States, as well as the District of Columbia, has dram shop laws in force, and these laws are in force to make sure that the establishment is serving alcohol in a way that protects the patrons. So across the board, what that means is that an establishment needs to make sure that they are not selling to anyone who is already visibly intoxicated. They cannot be selling to minors and they cannot be selling to habitual drunkards. The next slide is going to go over what that means a little bit more in detail. So while alcohol is not consumed at these locations, they are held to the same legal standard as that of a sit-down restaurant. So when you think of a sit-down restaurant serving alcohol, they have time to monitor the alcohol consumption by the patrons. However, when you're at a convenience store, usually it's only in that 1 or 2 second conversation exchange that's happening as they check the individual out, and then the individual is immediately getting into a vehicle. So it's ever more important that our insureds have liquor liability coverage, because in those 30 seconds that they're checking somebody out at the cash register, they have to determine, is this person a minor? Is their license valid? Is this person already intoxicated? Or are they a habitual drunkard in this area? So that quick two-sentence exchange is not very long, and then getting right into a vehicle where it's common for many liquor claims to involve such tragic claims because they are getting right into a vehicle. So even if the insured does their due diligence and they are found in the situation that they are in a claim, they still will have a duty to defend themselves in the event of that claim. And we know that defense costs for a liquor liability claim can rack up really quickly because of the severity of the claim. Typically, defense costs end up in the six figures very quickly. So it's in an insured's best interest to purchase liquor liability insurance because it's such a small premium and it's a known figure on their balance sheet, whereas the amount to defend themselves in a claim, it could be crushing to their small business. And then it's also really important because we have expert attorneys that can specialize in their liquor liability claim that can adequately defend them and present them well in court if they do end up in a situation where a claim comes up. So it's just very important for the business owner to recognize that exposure that they have. So when we're underwriting the liquor liability for these retail operations, the alcohol is traditionally sold for off-premise consumption only. And when we underwrite it, we need to know the breakdown of the alcohol sales versus the other sales that are happening on the premise so that we can use the appropriate class codes. So whether they have dry goods and groceries, or if they have some seating and on-premise food consumption, or if they have an on-premise alcohol exposure, if they have like a bar that's at their location, understanding how that alcohol is consumed on the premise helps us or sold or consumed on the premise helps us choose the right class code. Something else that's important is that we can consider 24-hour establishments. So they can be open 24 hours like a corner store often is, as long as they're ceasing the sale of alcohol by the state mandated time. So lots of states that's 2 a.m. And anytime that there is a 24-hour establishment, we just make sure that we confirm that they are ceasing the sale of alcohol by the state mandated time. So when, in addition to those categories of underwriting criteria, we also want to make sure that an establishment is operating under a valid liquor license or liquor permit based on state regulations. We would like to make sure that their general liability limits are equal to or greater than what's being requested as a liquor liability limits. And it's a requirement that employees are not permitted to consume alcohol during their hours of service. Lastly, risks that feature predominantly youthful clientele in most states is going to be an eligibility requirement that they are not predominantly youthful. So if it's a liquor store that is right outside of a campus location, that would be something that would be deemed ineligible. But the majority of convenience and liquor stores are going to be eligible because most of them don't attract that youthful clientele. And then an important distinction for liquor liability is we have no cap on the annual alcohol sales. So there's no sales threshold on how much alcohol can be sold in order to get a liquor quote. Some exposures that we can consider that are very unique to retail alcohol sales are things like drive-through beer, wine, and liquor sales. So they can have a drive-through, and that's okay as long as the alcohol is sold in sealed containers. So as long as they're manufactured and sold in those containers that the manufacturer put out, that drive-through exposure is okay. There are some to-go daiquiri exposures that we are able to consider. However, if they are located in the state of Texas, that is when they become ineligible. But GL and property coverages would still be eligible for that exposure. Many liquor stores will have some on-site tasting or sampling, and that is okay for us. It is something that we underwrite to, as long as the patrons are not serving themselves the alcohol, but there is somebody there serving it to them and limiting the amount of sampling that the patron is able to do. That is okay with us. Additionally, they can also have internet sales of alcohol. So whether it's beer, wine, or liquor sold over the internet, that is an okay exposure as well, as long as when it is getting delivered to the patron's premise, somebody is accepting the package, produces a valid ID that shows that they are of age for drinking.
Thank you, Michelle. I really appreciate all that great information. Now, continuing on with retail liquor operations, let's discuss a liquor store risk. When you are out on sales calls and you come across a liquor store, how do you know whether this is an account you want to go after? Here are a few tidbits of information to help you understand what you should be looking for. So look around the store. Is there a pride of ownership? Do they keep the store neat and clean, or do they have piles of boxes blocking the back exit door and aisleways? Or are they missing tiles in the flooring, or is it all cracked? And what are they selling? Are they selling tobacco products? Are they selling CBD, kratom, or THC products? Most carriers are okay with tobacco, but it may be a little bit harder to find a market that is going to be okay with the CBD, kratom, or THC sales. And check cashing may be advertised on the outside of the store as well, and they could be offering delivery services. So make note of what you see being offered and sold so that when you put your applications together, you're able to disclose all of their operations, all of their exposures and services. This will help us as a wholesaler properly place the account with a carrier that has an appetite for all of their exposures. And here is a case study of a liquor store risk that we would want to go after. So they have 500,000 in liquor sales, and this amount of sales seems to be a sweet spot with their carriers. They're offering check cashing, and they have on-premise liquor tastings. The coverages you would want to present for this client would be general liability, business personal property for their inventory, business income, equipment breakdown, since they do have several refrigerators, and liquor liability. You may also want to ask for a copy of their lease agreement to see if they need any other coverage in order to comply with their insurance requirements. On this next slide, I put together a list of common property coverages that I see being requested for convenience and grocery stores. Every risk is different, which can make it difficult to understand what your customer needs. So hopefully seeing these coverages listed out will help you to determine what should be offered to properly cover your customer. Building coverage can be offered if the applicant owns the building or if they're on a triple net lease agreement with the landlord, which is requiring them to insure the building. If the applicant is a tenant and requesting building coverage, I will be requiring a copy of that triple net lease agreement with your submission. Business personal property coverage is to cover their inventory, shelving, furniture, etc. Tenant improvements and betterments is used to cover items that are owned by the tenant and installed to the building. And business income, also known as loss of income, is to cover lost income due to having to temporarily close their business for something out of their control, such as down power lines. Canopy, gas pumps, and sign coverage are common property coverages needed for gas stations, convenience stores, because they'll have the large detached canopies with the gas pumps underneath, and possibly an outdoor detached sign, which is displaying the gas prices. Glass coverage is to cover the window glass. Some carriers do lump glass coverage under the business personal property limit, and some others don't. So when glass coverage is needed, it's best to request a separate glass limit on the property accord form so that depending on what carrier I'm using, I know what I need to do to make sure they're getting that glass coverage. Food spoilage, I will touch on in our next case study. Equipment breakdown is to cover the equipment failure. A property extension endorsement will offer several coverages at a specified limit on a single form. Some of the coverages you may be able to get under this form are equipment breakdown, food spoilage, and sign coverage. And this is a really great form to request for all of your retail stores. It's usually very low premium, and you're getting a lot of different coverages. And then forklifts. I don't see this one often, but when I do, I see requested for larger grocery stores and supermarkets. We would write the forklift under an inland marine policy because self-propelled machines are excluded under the business personal property coverage form. The next risk I would like to go over are grocery stores. Grocery stores come in all sizes, from your small corner market to your large chain type of store. For most carriers, grocery stores are considered to be 3,000 square feet or less, with sales no higher than 500,000. So anything larger than 3,000 square feet or with more than 500,000 in sales is typically going to be considered a supermarket. And we can help you write the larger stores that fall into the supermarket category. But we are not looking to write the chain stores such as Albertsons and Vons, since they are usually insured by a carrier that has a special program for those chain supermarkets. When you go into a grocery store, what should you be looking for? The first thing I would look for is a cooking exposure. Do they have a taqueria, a deli, or a fast food restaurant exposure? If they do, what type of cooking equipment is being used? Deli risks typically won't have cooking equipment such as a deep fat fryer or grill, but taquerias and fast food restaurants probably will. So noting whether an Ansel system is in place over the cooking equipment to trap the grease vapors is important, similar to a restaurant exposure. The carriers will want to ensure that any potential fire hazard has a safeguard in place. Are there any vendors or tenants inside the store, like a jewelry counter or cell phone sales? It can be hard to separate out the liability exposure when multiple tenants share a space. So finding a carrier could be difficult if there are other vendors or tenants in the store. And what are their hours of operation? Are they open 24 hours? Certain carriers may decline the risk if they are open 24 hours, while others may want to confirm that at least 2 workers are on each shift. And similar to the previous liquor store case, are they offering check cashing or delivery? Because again, some carriers are okay with these exposures, while others may not be. And is there pride of ownership? Trip and fall exposures are one of the most common grocery store claims. So things like making sure the store is clean and neat is important, as well as wet floor signs being used while mopping. The case study I put together for the grocery stores is an international market with no liquor sales, and their annual sales are under that 500,000 threshold. They do have a taqueria selling tacos and burritos to go, and a new landlord just took over the strip mall. So the grocery store owner is looking to get coverage in place because they've been operating without insurance. And this is fine. We can write risks with no prior coverage. We would just ask for a signed no known loss letter at time of bind. And after looking around and asking the owner some questions, they seem to have the proper fire safeguards in place, and the store is clean and tidy. So here are some of the coverages you would want to discuss with the client. Of course, general liability, business personal property to cover things like their inventory and shelving, business income, tenant improvements and betterments to cover all of the cooking equipment they installed, equipment breakdown, and food spoilage to cover the refrigerated items. If the power were to go out, the customer could lose all of those perishable food items in the refrigerator. So recommending food spoilage coverage to cover those perishable food items would be a good sell to the client. And lastly, we have convenience stores.
Teresa, before we move on to
Yes.
convenience stores, there is a question under the
Sure.
Q&A tab, if you can see it there.
I am not seeing. Oh, under the Q&A. Sorry, I was looking under the chat.
Yeah, no worries.
My mistake. When there is only a glass claim, does premium go up on the next renewal? It's a possibility. The carrier is going to probably see what the loss ratio is. If the claim is, I don't know, $1,000, $1,500, $2,000, something like that, you may not see an increase. Maybe you'll have to bump up your property deductible from 1,000 to 1,500. Who knows? It's definitely going to depend on the carrier. Some carriers won't even think that's a big deal, depending on what your loss ratio is. If your premium's only $900 and you had a claim that's 1,500, then yeah, you're probably going to see a little bit of an increase because they already lost money on the account. So it's definitely going to vary. All right. So let's get back to this convenience store case study here. So there are going to be convenience stores that are attached to gas stations and strip malls, and you can see them at just about every corner. Some may have a heavy cooking exposure, selling fried chicken, pizza, while others may have just hot dogs or microwavable items. So again, notating the type of cooking and equipment and cooking equipment used is helpful when underwriting the account. And see what their hours of operation are. Are they open past midnight? Are they open 24 hours? Every carrier will have their own guidelines. So knowing this information will help me to determine what markets are available. And are they selling CBD, kratom, THC products, check cashing? All the items we discussed in the previous 2 case studies will also apply here. So a big thing convenience store owners are wanting is theft coverage. Theft claims are frequent. Very frequent with the convenience stores. So making sure they have surveillance cameras and a central station burglar alarm are great protective safeguards for them to have in place so that I can help you find a carrier that will want to offer them theft coverage. So in this convenience store case study, we have a convenience store, a gas station, an oil lube shop. The client owns the building, manages the convenience store and gas station, but the oil lube shop is leased to a tenant. The convenience store and gas station are a 24-hour operation, and they do have beer for sale. So there's kind of a lot going on in this example. We have a lesser's risk exposure due to space being leased to the oil lube tenant. The client owns the building and manages the convenience store and gas station. So taking into account the items we've previously discussed, such as pride of ownership, looking for cooking exposure, check cashing, etc., we now have to find out, does the oil and lube shop tenant have general liability coverage in place? If not, we need to find them coverage so that we take some of that liability exposure off of our client. And most carriers require that all tenants have their own liability coverage in place. So due to the 24-hour exposure, we would want to know how many employees are working overnight. Each carrier has their own guidelines, but some carriers are wanting 2 workers on the night shift and maybe even a drop safe in order to minimize any late night burglaries. So if you are open 24 hours, being able to put cash in a drop safe is a great protective safeguard if there is not a way to deposit cash during the day. And gas sales is a new exposure for us today. Some carriers rate gas on sales, while others rate on the number of gallons sold. A convenience store supplemental application is a great tool to use when trying to gather all the needed information from a client, because I understand that this can be overwhelming. So utilizing the supplemental application will help guide you through some of these items we have discussed. And after considering all of their exposures, it would be smart to offer them general liability, liquor liability, since they do have beer sales, building coverage, business personal property, business income, canopy and awning coverage for the structures over the gas pumps, as well as the gas pumps. And some carriers will add gas pumps coverage under business personal property, and some might rate for it as outdoor property. So similar to the glass coverage, I do recommend separating out the gas pump coverage on the Cord 140 so that coverage can be appropriately rated for. And like the previous case study, recommending equipment breakdown due to the refrigerators and food spoilage if they have perishable items. And to wrap things up, here are the items we would need to help you find a competitive quote. Again, utilizing the supplemental applications will help guide you through all of these exposures that need to be addressed and rated for. We do have a supplemental application available on our website, but we'll certainly work off of other carriers' applications as well. So in addition to the supplemental application, we would need an Accord 125, 126, and 140 and loss runs. If they are unable to provide loss runs because they're a new venture or they've been operating without coverage, that's fine. We can definitely consider those risks as well.
All right. Before we move on to this last slide, there was a question, someone asking if AMPMs qualify, Teresa.
Yeah, I'm pretty sure those are, I'm assuming, a 24-hour type of operation. That's fine. We definitely have a couple of AMPMs on the books.
Perfect. All right. Thank you, Teresa. Thank you, Michelle. If anyone has any other questions that weren't answered, go ahead, chat them in now so we can answer them before we sign off. And then after we do sign off, I encourage you all to browse our website, cidinsurance.com. We have tons of tools for you and your office to use, marketing materials, proposal templates, fillable applications, and a ton of recorded and upcoming webinars. Don't hesitate to reach out to Teresa after the webinar. Her contact info is right there on the screen. She'd be happy to answer any questions you have. And if you have completed applications on file, you can start sending them over to the submissions email that you see on screen. So I don't see any other questions in the chat. So that'll do it for today's webinar. We appreciate you all taking the time to join us, and we look forward to doing business with you. Have a great day.